I hope you're enjoying this as much as I do. Some people will think that the virus has affected my brain or something, but this is really nice stuff and you should enjoy that. Rogue assume a VAT rate of 14%. Mr. Rogue is the owner-manager of Overland Cash and Carry, a registered VAT vendor. Recently, she has become suspicious of her head cashier, Mr. Gericke. She suspects that he often takes money for himself. She therefore decided to count the cash on hand on Monday, 10 May 2013, before banking the money for the week, which confirmed her suspicions. According to the count, cash of 9,500 Rand is on hand. So you will see that you are going to do the transactions from 1 December to 10 May 2013. Now that means she did perform this cash count on 10 May. So the closing balance of her cash on hand was 9,500 Rand. So in a cash account, closing balance 9,500, the actual amount that she has on hand. While the sum of the cash register roll for the week, this is now all about the week, the last week ending on 10 May, shows a total of 10,200 Rand. This amount is already included in the cash book. And they're going to give you the figures for the cash book here. They give you the cash sales for the period. So it's already included in that figure there, the 10,200 Rand. The total receipts issued for this period was 2,100 Rand. All receipts issued are in regards to debtors settling their accounts. Because of the differences found, she decided not to bank the cash until further investigations was undertaken. So that amount of cash received, that needs to be recorded in our cash account because that is nowhere else to be seen in the figures that they gave us. Mr. Gericke has been appointed at the beginning of the current financial year, 1 December 2012. For the purposes of having sufficient change, a total cash float of 1,500 Rand should always be in the register. So the opening balance on my cash account will be 1,500 and the closing balance will be 9,500. Now, they're going to give you a lot of information and they want from you to do the following. Determine how much cash was stolen during the period 1 December 2012 to 10 May 2013 by preparing the following ledger accounts: bank, cash, debtors control, creditors control, sales and inventory. So in this case, you're going to start immediately. You draw your 10 T accounts for all these accounts, and as we're going to go along, we can insert the balances and the transactions. In the cash account, we've already seen that the opening balance was 1,500 Rand and the closing balance was 9,500 Rand. In the B side of the question, calculate the amount of cash stolen during the week. Now, the first one relates to the whole period, 1 December to 10 May. The second one is only that last week in May, how much was stolen. And then the third one, you have to name and discuss internal control measures to be put in place to limit the risk of theft. Okay, so let's start then with the T accounts here, and let's insert into those T accounts as we go along all the information that we have. And let's start here, because this was balances that they gave you. So if we're going to start with the balances, in our inventory account, opening balance 12,665, closing balance 35,646. So inventory 12,665, opening balance, closing balance 35,646. Our debtors account, opening balance 56,464 and closing balance 46,976. So debtors 56,464, opening balance, closing balance 46,976. Creditors, only opening balance and I don't know the closing balance, so that needs to be determined. So 39,798, my creditors account, my opening balance there 39,798. Then our bank account, opening balance of 9,900 Rand. And in this question, it's clear that there is definitely a cash account and a bank account, because here's the bank, here's the cash account, which again, they don't give you the opening balance because they actually did give it to you before, which was the 1,500 Rand, total cash flow of 1,500 Rand. So 1,500 Rand. Now that 10,500 Rand is what I think it should have been. But what you only going to record is the actual cash balance at that stage, because we want to work out how much cash is gone. So the actual cash balance then of 9,500 will become the closing balance. So opening balance 1,500 and closing balance 9,500. Bank account, we have the 9,900. We do not know what is the closing balance. They tell us on 1 December 2012, the bank statement showed a positive balance of 9,990, but that is the bank statement, and that's not to say that that is the bank account balance. So the 9,900 opening balance in the bank account. There it is, 9,900. Right. Now we can start there at the top again. The first thing that we have seen is that there was receipts, cash receipts of 2,100 Rand. Now that cash receipts has not been banked as yet. So therefore, she decided not to bank the cash until further investigations were undertaken. So she hasn't done anything with that 2,200 Rand. This cash, which represents the cash register sales, they say this amount's already included in the cash book, but there's no way that they tell us that that 2,100 Rand was recorded anywhere. So that 2,100 needs to be recorded separately. And we're going to debit our cash account with a 2,100, and we are going to credit our debtors account, cash, 2,100 Rand. Right, deposits according to the bank deposit book for the period amounts to 90,110. So therefore we reduced our actual cash, 90,110, and we debited our bank account, 90,110. So here in the debit, that was the amount deposited into the bank, and that was the cash that we've taken out of our cash, 91,110, which we have deposited directly into our bank account. Cash sales for the period amounts to 54,950. This is the amount according to the sales column in the cash book. Now, two important things. It was cash sales. So it can't be in the bank, it must be in the cash account. Cash sales was 54,950, but the 54,950 was not the total amount. That was only the amount that was recorded in the sales column. Guys, if I have a cash account, I'm going to treat a cash account like a type of a bank account. So I'm going to have different kinds of columns in my cash account as well, especially in a setup like this where we have large cash receipts from debtors, and probably you are going to receive or pay more than one thing very often out of your cash book, out of your cash book. So out of this cash, in inverted commas, bank account. So the amount for cash sales was not in total 54,950. That was only the sales amount. Now they want you to do the sales account as well. So in the cash account, you are going to receive 54,950 plus the VAT. So multiplied by 1.14, 62,643. The 54,950 is the sales. So that will really go to my sales account, cash sales 54,950. The difference between the two, and they don't ask you the VAT control account, well, you would have posted to the VAT control account. And I like to ask the VAT control account, so make sure that you do understand the VAT control account as well. Good. Inventory previously purchased on credit from suppliers was paid for by check. So that payment went through the bank account, the normal bank account, the current bank account. The total amount paid to suppliers amounts to 35,876. So in our bank account on the credit side, we have paid our creditors 35,876 and the debit was posted against our creditors account 35,876. Inventory invoiced. Invoiced means it includes VAT, was purchased and paid for by check. Check means it's out of our current bank account. So it was invoiced, so that was also the amount that we paid for it because it was the total amount 9120, and that will go out of our bank account. So out of our bank account 9120. But we have purchased inventory, and inventory does not include VAT. So for the purposes of the counter leg posting, I have to take out the VAT out of the 9120, and I'm going to post only 8,000 Rand on the debit side of the inventory account. The difference, 1120, would have gone to the VAT control account. You have to read very, very carefully. Inventory purchased on credit for 2394 was sent back to the supplier. So that was the amount that we have purchased it for. So that amount will include VAT, and that is going to be sent back to the supplier. So we're going to debit our creditors account with the amount that we're going to send back, the total value of the goods per invoice. So the credit note would have been made out for an amount of 2394. And we have to adjust our inventory record, but not with 2394 because that includes VAT. So we have to take out the VAT, and only 2,100 Rand would have been credited to inventory. There would have been a credit to 194 Rand to our VAT control account, and the debit of 2394 would have been posted against our creditors account. On 30 November 2012, an internet payment of 90 Rand was received from a debtor. On 1 December 2012, this amount still does not appear in the books of Overland. So that's an easy one. We have to debit our bank account because it was a direct deposit, the internet payment, 90 Rand, and we're going to credit our debtor's account with 90 Rand. Straightforward, it's just an amount that we received from a debtor. For the period 1 December 2012 to 10 May 2013, electronic payments of 35,000 Rand were received in respect of debtors' payments. So electronic payments will go via your bank account. The above 90 Rand is not included in that amount. So we would have received in our bank a total of 35,000 Rand. And the counter leg, the full amount, would have gone to our debtors account, 35,000 Rand. Good. The South African Revenue Service made a VAT repayment to Overland. The payment was received in cash. That will never happen. It's just in a question to catch you out. From SARS and amounted to 34,000 Rand. The VAT rate is 40% once more. So that amount that we're going to receive in cash from SARS would have been debited against our cash account. So there's the 34,000 Rand VAT control, and the counter leg would have gone to the VAT control account, 34,000 Rand on the credit side. An amount of 5,000 Rand was received in cash from a debtor whose debt was previously been written off as irrecoverable. So in cash, we will debit our cash account with the 5,000, and we would have credited credit losses recovered with a VAT exclusive amount and VAT with a VAT amount. Please never ever credit losses recovered in the debtors account. You will not pick it up there because it should not be there. There was no data left anymore that we could have credited in our debtors control account. The gross profit percentage is 25% on the cost price throughout the question. Now, so if we want to write down our little profit formula, it's 25% on the cost price, so it looks like that. Now we have seen with Mr. Dashund, I think it was, that why do we need this? Well, if we have total sales, we can work out the cost of sales amount. And the cost of sales amount is an entry in our inventory account. So we need that in order to apply that to our total sales in order to get to cost of sales. Right, and it seems that we have now all the information that the question has given us plotted in all the different accounts. Now we go back to the different accounts. If we go and have a look at the bank account, 9,900, 9110, 90, 35,000, creditors, inventory, and then the closing balance 9104. A very far cry from the 9,990, whatever the bank statement is actually given us, and there should be good reason for that. So the one that you're working with is not the bank statement balance, because nowhere in the question have they told you that that balance has been reconciled and that you balance back to that balance. In your cash account, well, we have the opening balance, the sales, the receipts, the 2,100 that was not actually been recorded, the refund from the SARS, credit losses recovered, and then the amount deposited into the bank and the closing balance. So this credit that's lying on our cash account, that balancing figure, that represents the theft for the period from 1 December to 10 May. So we cannot explain that. There was an outflow of cash, it's a credit on the cash account, of 5633 that we don't know what it's all about. And we can only come to the conclusion that that is actually the amount that Gericke has stolen. If you go to the debtors account, well, we have that, we have that, we have that, we have that, we have that. So there's only on the debit side a balancing figure missing. And that balancing figure equals the credit sales for the period. Remember, we have already recorded the cash sales from our cash account. That was the VAT exclusive amount of the 62,000, the 54,000 that was according to the sales column of the cash account. And then the amount that we're going of credit sales will come from the debtors account. But again, I cannot use the 27,702 because that equals the invoice value. And we can only record the VAT exclusive amount in the sales account. So the 27,702 divided by 1.14 gives us credit sales of 24,300. So we have cash sales, we have credit sales, so total sales 79,250. We have already determined what is our markup percentage. So cost of sales will then be 100 divided by 125 multiplied by 79,250, which gives us cost of sales of 63,400. And now we know that figure and we can plot that in the inventory account. So on the credit side, cost of sales 63,400. Let's have a look now at our inventory account. We had an opening balance of 12,665. We had the cash purchases of 8,000 Rand. We have our cost of sales, which we have just calculated. We have the goods that we've sent back to the creditors of 22,100, and they gave us the closing balance of 35,646. So the balancing figure is now on the debit side to an amount of 80,481. And what does that represent? Here was cash purchases, so this must be credit purchases, which links to creditors. But the inventory account is a VAT exclusive account. So therefore, if we want to take that amount and plot it into the creditors, we must remember to add the VAT back. So the amount that would have been recorded in the creditors account would have been the 8481 times 1.14 equals 91,748. Now, if we balance off the creditors account, the closing balance of creditors will be the balancing figure on the debit side of 93,276. And then we're done with the first part of the question. The second part of the question is all about what was the total amount that they've stole in the week ending 10 May 2013. They tell us that they had 9,500 Rand of cash on hand. They tell us that they usually have 1,500 Rand of a float. And then they tell us that the total sales for that week was 10,200 and there was cash receipts of 2,100. So therefore, the 10,100 plus the 2,100 receipts that represents the receipts from the customers, from the debtors, plus the float amount give us a total that they should have had on hand as at the 10th of May. They should have had 13,800 Rand on hand. The physical stock count, however, only revealed that they had 9,500 Rand on hand. So therefore, the difference between the two, the 4,300 Rand, is the theft for the week. It's only for the week ending 10 May, 4,300 Rand. Now, the last part of the questions is a few checks and balances that you must put in place in order to prevent this from happening again. There must be more responsibilities of somebody to check the bank account, the cash, the amounts actually received vis-a-vis the amounts that has been deposited into the bank. Bank reconciliations, different people who must be responsible for receiving the cash as from the people who is actually responsible for maintaining the ledger accounts. There must be a documentation in place, how, what and when. There must be certain authority levels that has to take place before any payments can be made. There must be physical control, so therefore cash must be counted on a daily basis, and then that must be reconciled back to the total cash takings of the day. Independent internal verification, some senior person on a surprise basis must come and do the checks and balances themselves, and any other valid point that you wanted to raise.